Okay, so good day, ladies and gentlemen. Welcome to this BS Group webinar. It's great to be here, and it's a very big honor for me to be moderating this. My name is Apostolos Poulovassilis. I'm representing the Business School of Athens here, and I'm also very proud and honored to have a distinguished panel of experts to support me. We're going to be talking about some, I think, pretty interesting initiatives and some of importantly, the responses that the industry has been forced, in some cases, to make due to the COVID-19 outbreak. But I think, having had a preview of some of the presentations, we're going to have a very practical view of what is actually happening in our industry. So. Without any further delay, I'd like to introduce my fellow panelists. First of all, on my left, I think as you're watching us, I'm very proud to have Katerina Stathopoulou. She's the executive director of the Investment and Finance Limited company. She's going to be giving us a big insight and hopefully some predictions on what is actually going to be happening with let's say, macroeconomics and what we could expect from the different markets over the forthcoming period. Below me, I have Mark O'Neill. He's the president of Columbia Shipmanagement. And on the bottom left, I have Panagiotis Drosos, who is the COO of Capital Shipmanagement Corporation. And both of these gentlemen will be giving their company's experience and their, let's say, personal involvement in those action plans, which I think is very important and critical to understand actually how the industry has faced the challenges, but more important, how we have responded. So what I'd like to do is, at this stage, I'm going to have a bit of an introduction, give a bit of the, let's say, the insight about, what is happening, let's say kind of the big picture. But before we do that, I'd like to announce the commencement of the first poll. So we have actually two polls on this webinar today. The first one is actually can be going and starting now. We're going to have one question, which you can answer throughout the discussion that we're going to have. And then there's going to be another poll after the presentations have been completed. So you can see that properly on your screens now. So I will start with an insight, and I'm just going to share my screen. So as I said, I'd like to give the big picture about what is happening, the COVID impact. Obviously, this has been a huge impact on everyone's lives, livelihoods, the communities, businesses on a global scale. And as we speak, as this webinar is going on, actually, it's a very dynamic situation. International response continues to develop. We have varying stages of maturity of the health crisis. But it must be said that most countries, companies, industries are actually operating in uncharted waters. And I think this is the biggest challenge that we all have. The other thing is that critical and correct information on the characteristics of the virus, its impact on the global business landscape, these are difficult to assess, and they're changing almost every week. So as a result, I believe that this initiative by BS Group to bring together this panel of experts to help analyze the situation and to actually demonstrate, what are the real challenges facing the maritime community, and try to filter out a lot of the fake news which is being spread, through social media, etc. And it's a very significant initiative. So it has been said, and it's a bit of a cliche, that out of every crisis comes an opportunity. But I think this is especially true of this pandemic, where obviously beyond all the tragic loss of life, which must be on everyone's thoughts, unfortunately, this is still continuing. But there have been a number of new initiatives and ways of working that have emerged, which I think will be with us to stay, and will also help define the new norm for the future. Now, every one of us has had to face some of the biggest challenges of our lives and careers, but collectively, the good thing is that we have been able to develop areas, initiatives, creativity, innovation, and new applications of technology, which may otherwise have needed years to come. In a way, they've been forced out of this adversity, as in, this has happened many times in our industry. Unfortunately, it will take a negative event in order to accelerate change. But hopefully, what we will be discussing today will illustrate some of these new initiatives, some of the measures that are necessary to ensure business continuity, but also the effectiveness of those measures on an individual basis. I think also the timing of this webinar is especially fitting because tomorrow is the International Day of the Seafarer. This recognizes the invaluable contribution that seafarers make to international trade and to the world economy, often at great personal cost to themselves and their families. So this has to be our industry's top priority. Now, various industry bodies, they've been very vocal. They've been approaching local, regional governments to aim to get key worker definition for the seafarers. So far, this unfortunately has proved unfruitful. Out of the 2 million or so seafarers globally, around 300,000 are still in a situation of limbo. So they're facing uncertainty, not only themselves, their families, of course, but also their companies about what's going to happen, how they're going to make necessary crew changes, who's going to be repatriated, who's going to be embarking and disembarking from each vessel. So it's almost like they are trapped, and we're almost halfway through this year. So it's been a few months, and of course the clock is ticking. Now, we need to stress this, I think, even once more, and I'll take this opportunity today, even if people do get tired of hearing this, but the maritime industry is the backbone of the global economy. Without it, movement of essential goods, including, especially for this crisis, medical supplies, equipment, etc., they would grind to a halt. So the true heroes of transportation, who keep the ships moving, are indeed the seafarers, who are frontline workers. There's no other way to look at it. So, as I said before, even if people are tired of listening or reading this, because the feeling is that the world in general is either not listening or not appreciating or not understanding the work that is actually being done, but keeping trade and essential raw materials and goods flowing has to be recognized, has to be, let's say, welcomed by everyone. If you're welcoming the cargoes, you need to welcome the seafarers. Allow the seafarers to transit with the right levels of precaution, obviously. And we've seen this in other industries like in road transport and tourism, and etc. So I'm not apologizing for this repetition. However, we need to continue to voice our call for action collectively, hoping that something will happen and that governments will finally listen, and most importantly, they will act. We also need to highlight, and I think this will come out of some of the discussion points later on, that there are risks. By extending and prolonging seafarers' service on board, there's fatigue, anxiety, stress, mental health, loss of resilience, which unfortunately could also impact on motivation, engagement, and ultimately performance that every company is fearing and is trying to mitigate this risk. And last week, we saw that the ITF gave a go-ahead for crew to stop working even. So where is this going to lead us? Let's say enough is enough, but what's going to happen to those ships? And what's going to happen to those cargoes? Not to mention the potentially negative commercial, legal, and insurance risks. So moving on from that, commercially, which Katerina is going to cover in a lot more detail, but the key points are that inevitably global economic activity has slowed down significantly in 2020, following on from 2019 even. But some nations now are even entering recession, primarily because of what's happened with this pandemic. And although governments, EU, are trying through fiscal monetary stimuli to bring back some accelerated form of normality, I would say, with trying to contain the virus at the same time, businesses and consumers are definitely going through challenging times, with the service sectors especially being hit the most in the short term. Now, additionally, international trade in goods is expected to continue to decline in 2020, as most economies are struggling to recover from the lockdown measures. What does this mean for freight rates? Obviously, there is a direct link. A number of the sectors, most of the sectors, I would say, are facing this negativity. Although tankers, these were positive initially due to the massive demand for storage because of the big drop in oil prices, both on land and at sea, I would say. But as this has almost, I would say, stabilized, in the longer term, global oil production drop will negatively affect freight rates for oil and product tankers due to the fundamentally smaller demand. Dry bulk, again, here demand has been negatively impacted for the full year as China initially at the beginning of the year, because of the pandemic, they limited their imports. But we have seen most recently some positive signs, especially for the larger ships, where the demand for commodities has been increasing again, giving some stimulus to the market. Container ships, again, demand has been negatively impacted for the whole year, although China exports have resumed, even though Europe and North America demand is still being impacted by the effects of their respective lockdowns. In the gas segments, combination of the COVID-19 crisis and a very mild winter in the Northern Hemisphere, this has put a global demand for natural gas on course for its largest annual decline in a decade. And as of early June, all the major gas markets worldwide have been experiencing falls in demand or slumps in growth, according to the IEA, International Energy Agency's latest annual report. And similarly, the COVID-19 related lockdowns in many countries across the globe, this has weighed on the demand for LPG products. As crude oil prices drop, has meant that naphtha products have gained a competitive edge over LPG, leading, of course, to a decline in imports by the major regional petrochemical players over the past couple of months. So based on all this, and even with the recognition that our industry is, even in normal times, a volatile one, I think it's fair to say that even this level of volatility could not have been expected. And it reminds me of what I say sometimes to my students about always expect the unexpected. So the macro effects of reduced consumption due to higher unemployment, lower production of most commodities is almost, for sure going to bring a double negative on the freight rate indices for, let's say, the immediate future. Now, depending on the developments of the pandemic in the next couple of quarters, which again, no one really knows, and we are not the experts, but the slowdown of globalization could even be more pronounced. And it could be even more pronounced than what we saw in 2008 and the world economic crisis. In addition to the pandemic, we also have some increased indications of regional protectionism, which could also bring more bad news for our industry. Although, as usual, there were going to be some winners and some losers, as it happens inevitably in our industry. So, going back to some of the more operational aspects, where companies day to day are being involved, one of the situations that has had to adapt has been that of the inspections, the surveys, and certification regimes. Here, the situation has actually shown that extensions, exemptions, requests, let's say for alternative means of compliance, these have been handled pretty effectively up to now by the regulators, by class societies, flag administrations, etc., with most organizations adopting remote survey techniques, remote audit processes, which for sure these capabilities were with us. We had them before this crisis, but being a risk-averse industry, I would say they had only been sporadically adopted and implemented. So the pandemic, actually, this is a good example of where the pandemic has enabled these processes and these initiatives to come to full-scale application. In terms of new buildings, again, the global slowdown, this has necessitated an even lower level of new contracting compared to the low levels that we had even in the previous years. But The other thing has been the delays, the cancellations in the confirmed orders, which has meant fewer deliveries expected over 2020 to 2022. Actually, Clarkson's, they've just issued the projection for about 16% reduction in the scheduled 2020 deliveries. So this is probably a good thing in the overall scheme of things for the net fleet growth and the supply-demand balance in the existing fleet, but definitely is not good for the shipbuilding industry and those working within those sectors. And finally, I'd just like to say a few things on the environment, because there's been a lot of discussion around some of the future aspirations, the targets for environmental regulatory frameworks that are being introduced, both at the IMO level, but also regionally by the EU, for example. And many have voiced the opinion that this global slowdown just on its own may be probably the best way of reducing the overall levels of emissions, and consequently such severe measures to decarbonize the industry could either be revisited or moderated or perhaps delayed if possible. However, there are still many drivers and catalysts for leading the technological development into alternative fuels or propulsion systems and even hull forms, which many leading companies in the industry are continuing to invest in. But it remains to be seen who actually will be the winners, who will be able to afford and be able to get the payback for these, let's say, novel designs which are being discussed. So these and other key themes are going to be very important when countries and businesses are leading their restart or relaunch activities, which are aiming to restore the trust with their customers, but also putting or making sure that health and safety of the people come first. So similarly for shipping, we have to aim to revive the demand, revitalize our operations and supply chains, and it's the opportunity to use information technology as a true enabler. So with these opening remarks, what I'd like to say is please use this webinar as an interactive platform. We have the tools available thanks to BS Group. And as I said, let's see how some of the practical issues have been shaping indeed inside the companies and the people involved in the industry. And I think we can all learn from some of these initiatives and take them forward in our own businesses. So I think at this stage, hopefully, if there have been enough participation in the poll, we can have a look at the results. If we can put this on the screen, perhaps. I will stop sharing mine. I understand, as with technology, many times we've had a technical problem with the polls. So we've had to cancel them, unfortunately. So maybe this is something that we can do offline. I'm sure BS Group will be able to put something together. And from everyone who's been kind enough to join today's webinar, we can use a remote technology to get this poll outcomes and engage the results. So with that, I think I can pass on ladies first to Katerina Stathopoulou to give us her insight on the commercial and financial perspective. Katerina, over to you.
Thank you, Apostolos. Thank you. And good evening, everyone. Let me share my screen. Okay. I will be discussing the impacts on liquidity and capital risks in both the financial system and real economy. And what I would first of all like to say is that shipping always encounters crisis. It is not the first time that it has hit against rough seas. We had a crisis in the 1980s. We had another crisis in 2008. And then now we have the COVID crisis. The 2008 crisis was the Lehman crisis, and the mid-80s crisis was the mid-80s crisis. That's what it doesn't have another name. All of these three milestones have different issues and different starting points as a crisis. So COVID up to now has the 2008 crisis, the Lehman crisis was a financial crisis. And as shipping is a capital intensive industry, as we all know, that hit the shipping industry the hardest, but it also hit other industries as well, as we had a financial and banking crisis. Now, COVID has impacted all the industries and the banks and the liquidity. So allow me to, first of all, start putting some perspective in what we've been discussing up to now. This is not supposed to change so quickly, so please. I'm going to stop sharing. I have a technical issue. Okay. Let's look at annual GDP. Let's look at the economy, first of all. You will notice here that we have the blue line is the annual GDP of developing economies, year-on-year change, and the red line is the annual GDP advanced economies. So the advanced economies follow, and the developing economies follow the same trend. What is notable is that in 2008, we are now almost double the dip that we had in 2008 in annual GDP for 2020. So it was around -3%, and it is estimated that by the end of 2020, we will be, for the advanced economies, at a -6 and at a -1 for the, over here, for the developing countries. And there is a projection as we stand today that in 2021, everything will rebound. Not as much as it did in 2009, but close to that. Now, if we look at annual GDP versus seaborne trade and the year-on-year, okay, the blue line is the annual GDP, the world annual GDP, the average of both developing and advanced countries, and world seaborne trade. Obviously, these coincide because seaborne trade and annual GDP worldwide correlate. And again, we see that world seaborne trade has a very high dip along with annual GDP. And it is expected to have a sharp rise. Some reports I was reading yesterday are slowly starting to say that we may have a V-shaped recovery. Let's hope. This shows a V-shaped recovery, but let's see if that's going to materialize. Let's look at world seaborne trade a little bit. We have, the blue is in million tons, and the red line is the seaborne trade difference year-on-year percentage-wise. Again, we see the dip that happened, the 2008 Lehman as it was in 2008, it happened in September. The big effect hit 2009. And again, we are here in 2020. We are again very close to the -6% compared to last year. World seaborne trade dipped, but it is expected to rise. Again, V-shaped, actually, as you can see. It will go higher to 6%, from -5% to +6%. That is a sharp increase. Now, world seaborne containers, which is the finished goods that are carried and show the economy and how strong that is again, I'm comparing it to 2008, 2009. You see that for 2010, as of May, we are at minus 10%, and it is expected to go up to plus 10%. So this again shows that we may be having a sharp increase. Car trade now, seaborne in cars, which is the actual economy, the finished goods and consumer goods, that is an indicator here. This dropped to minus about 35%, both in 2009 and 2020, as of May 2020, and is expected to go up to positive 20%. So what we're seeing here, same thing with dry bulk. It is expected to go from -4 to +5. Oil trade dipped as well, and it is expected to go to +5%. We are actually seeing an expected recovery. Now, let's look at world fleet. Let's see where we stand and world fleet wise. The numbers here in millions of gross tonnage. We will see deadweight in the next slides. We have a world fleet growing for the first quarter and a half of 2020 in a much slower pace than the previous years, as you can see here. And this is the fleet values. What is interesting, so to speak, is that in 2019, we had approximately 1.4 billion tons, gross tons of tonnage in the water over here, and 1.4 billion in May, as of May. But the value of these 1.4 billion gross tonnage has dropped from 993 billion to 970 billion. And this is portrayed in this graph. Order book, the bottom side of this table, is again decreasing, which is good for world fleet and the supply side. So order book as percentage of fleet at the end of 2019 was 10%. The order book was around 10% to the world fleet. And as of May, we are around 9%. And this shows that we are increasing the order book. We're close to 9% within COVID. But all of this has to do with orders that were already placed and where it stands as we stand today. So these are orders that were put in for in the beginning of 2020. So it does show, however, that the order book has a tendency to go up. So we are increasing the supply side. The shipping fleet today, and as I said, we can look at it in dead weight. This is a comparison here in 2009. We had 1.2 billion dead weight in the water. And as of May, we are at the 2 billion mark, of which 8% is the world order book against the 2 billion world fleet in the water. Whereas in 2009, 52% was the order book against the fleet in the water. We were coming out of the high period of shipping that ran between September 2003 to September 2008, where it was abruptly stopped. The rally was stopped because of Lehman, the financial crisis. Now, the total dry bulk fleet, this is a world fleet, everything. The total dry bulk fleet has increased by 2.6 times from the end of 2005, in these 15 years, to May of 2020, to these 14 and a half years, okay? The total dry bulk fleet has increased by 2.6 times. And out of that, just as an indicator, the Capesize fleet has increased 3.2 times. It went from 111 million deadweight to 353. Now, Greek shipping is part of the large of shipping, okay? Greek shipping, as we said, we're going to touch on it a little bit. Greek shipping, here is the top 10 countries, the fleet of the top 10 countries. Greece is number 1 in number of vessels in each category: oil tankers, bulkers, general cargo, specialized and non-cargo. Greek shipping has a total of 17% in million gross tons, and it's in 13% against the world fleet in oil tankers and 20% in bulk carriers. In terms of world capacity, it is standing at 17%, and it is number 1. Now, in order book, this again is the top 10, and Greek shipping is in oil tankers, it has around 15% of the world order book and 3.6% in bulkers, with an overall in million of deadweight of 11%. We hold the 11% of the order book and 17% in number of vessels. Now, let's discuss money, because shipping, as I said, is a capital intensive industry. We all know that. And let's see what happens with liquidity and how has that been affected by this crisis. Let's remember a few key principles. Financing sources for shipping is cash, banks, capital markets, private equity. Private equity can be friends and family, high net worth individuals through banking or through private banking schemes, institutional investors, which we can call private equity funds. But traditionally, bank financing has been the major funding source, with European banks having been the major providers. Just a small, very brief snapshot, and I apologize, there aren't any updated numbers. The last ones that were available as a profile of sources of capital were 2017. And you could see that 60% of banks were European, 35% were Australasia, Asia and Australia, and 5% was the USA. So overall, the number of active banks have been reduced because the banks now focuses in reducing, exiting portfolios, deleveraging, and restructuring. And this capital-intensive industry is faced with an undersupply of available bank financing. We will discuss the other sources in a few minutes. Now, just again as a snapshot, these are interesting info, I feel if they are, that the top 40 banks' shipping portfolios from 2010 to 2017, and this is how the breaking down of the banks were. So in 2010, Europe had 83% share of shipping loans, and in 2017, 60. It dropped from 83 to 60, with Asia and the US, of course, picking up the rest of the shares. Again, just from 2008 to 2017, the top 40 banks lending to shipping over time, the top 40, you will see that in 2008, right at the point of the Lehman, the top 40 banks had 430 billion loans to shipping. This dropped, it increased a little bit in 2010 and 2011, and we are in 2017, it was around 345 billion, and today it is estimated to be at around 300 billion. So it is reducing banks lending to shipping. Now, when we talk about financing, there are a lot of details to look at, and I will do this as shortly as possible. When we talk about banks, we talk about lending policy, credit assessment considerations, and debt equity, you can say mix, that is your loan leverage. Now, lending policy and credit assessment considerations for new loans have become stricter. As banks, there are not a lot of banks that are available to lend for secondhand or new investments to the ship owners. So they are picky and choosy. The percent leverage has dropped. You can find anywhere between 50-55% is the average. A lot of new considerations and environmental regulations are also coming into force and playing a very big role to get your loan approved or to get a very good score for you to get a good pricing. So pricing has increased, tenors and repayment periods have decreased as Basel rules and regulations on the banks are really forcing them and making capital very expensive. Environmental regulations like the Poseidon principles have come into play, and the IMO regulation of ESG, environmental, social, and governance requirements are also playing a big role. So ship owners not only need now to, in order to get a loan, to show that they are prudent operators and efficient operators, but they also have to prove that their vessels are environmentally friendly and their companies can tick the boxes in social and corporate governance requirements. Other details, other than new financings that the banks are there to give, but with difficulties, and they are very picky and choosy on what projects they will lend and how much they will lend and what the pricing will be. We are still, and due to COVID again, they are looking into a lot of restructurings that need to be done to their loan portfolios. So restructuring actually increases the equity requirements of the bank, and this has led to the sale of the shipping portfolios of the banks to funds in order to clean up their balance sheets and be able to do new business in other sectors. Shipping, based on the very stringent Basel rules and the restrictions of Basel rules, is making shipping loans be more difficult and not as attractive to banks, including the IMO regulations now that they also need to tick boxes on corporate governance. So, other means of financing is private equity. What is private equity? Equity is capital that is not quoted in a public stock exchange. Private equity makes investments directly into private companies or by funds or individual investors. And in the past few years, they have entered the shipping industry by purchasing bank loan portfolios, which they purchase at a discount, but this discount is not carried over to the borrower. He still owes the full amount of the loan, although the fund has bought the loan at 50% discount. Or funds or in private equity are now coming in and filling in the gap of lending as providing loans just as financiers on the same terms. So what they're actually turning into and what they're called, funds are called alternative sources of finance. And they give loans as a plain vanilla loan like a bank with the same securities under preferred equity structures or bareboat hire. The difference from the banks is that you get a little bit higher leverage, but you have higher pricing in margins and because funds have expected returns, higher returns of the money from the money they are investing in shipping. So how do they get the higher returns? With increased margins and very high front-end and back-end fees and equity quick kickers in some cases. But of course, they also get the usual bank securities. So this is a trade-off between banks and the alternative financiers, who are funds that have come in to act as lenders. Now, it is not really a level playing field because alternative financiers, the funds, are not regulated financiers, so they are not required to look at or to comply with Poseidon principles and ESG regulations stipulated by IMO. So banks are getting more restrictions put on them, and the alternative financiers, being the funds, are non-regulated as banks are. But their difference is in pricing and the cost. And if you are in a very low market as we are today, it is very difficult to meet these high break-evens that alternative financiers require because of higher pricing. Then we have the capital markets and bonds. Just as a definition again, capital markets are shares that are quoted on a stock exchange and tradable between third parties, and bonds are debt instruments issued for a period longer than 1 year. Now, it is very interesting to see, we have the evolution of capital markets into shipping, and the blue is the red is the new IPOs, and the blue are the follow-on offerings, meaning you are already listed in the capital exchange and you go into the market to raise more money. Now, what is interesting to note, that in 2004, when shipping started its high cycle, the capital markets discovered the shipping industry. So we had our first IPOs in 2004. We had more IPOs in 2005, 2006. 2007 for new IPOs was the peak, because we had the peak of earnings in the shipping industry. And there was a lot of appetite for shipping stocks. From 2008 onwards, what we see is that the appetite is on follow-on offerings and very little appetite. You can see very few red bars for new money being given by the capital markets to the shipping industry. In fact, 2018 was almost minimal, close to zero. I mean, there's just a slither there. 2019 is zero. And of course, year to date today, May of 2020, it is still zero. But there have been successful follow-on offerings, meaning that there is money there in the capital markets for the shipping industry if you are already listed and you are a company trading on the stock exchanges. Bonds now again found shipping in 2004. This is not because I didn't have any more figures to give, but bonds again found shipping in 2004, basically because in order to give a bond, it is better if the company is listed. So there were capital listed companies, and they could also finance themselves through bonds, because it is easier to rate a bond if you are a capital listed company. And there's more transparency to the bondholders of how the company is doing financially. Again, now you will see that while we had in the previous slide a lot of money coming out of the capital markets up until 2007, 2008, there wasn't a lot of bond interest. Once the capital markets are not there to give new money to capital listed companies, publicly listed companies, bonds are there. So you can see that we have in 2019 close to 14 billion, 13 billion. And year to date today, we are at 12 billion of bonds already raised by shipping companies. Now, the total
Katerina,
amount of money.
I'd like to ask you to,
yes,
if you can just
2 minutes, I'm finishing. Yep,
Thank
2 minutes. Yeah. The total amount of money of IPOs, follow-ons, and bonds given to shipping as a max is around 22 billion. You can see that. So this capital intensive industry knows of crisis. It has gone, it has experience in dealing with crisis, and money is important for it. So as I like to say, cash in the industry is king. That was my presentation. I will stop sharing my screen, and here I am.
Okay, thank you, Katerina. And hopefully the crown that we saw there is not the corona, as we say in Greek.
It's not a corona, it's not a COVID, no. But I also like to say that cash is king, but it's best managed by queens, if you allow me.
Nicely put. So I think it was very, very interesting presentation, and already I'm seeing the questions are flowing in. What I'll do is, because of time interests, we'll go straight into the next presentation, and then we'll handle all the questions in the Q&A at the end. May I ask Mark O'Neill to take over and share his screen and
I will do.
Anticipation for your
good evening, everybody. There's a vessel, just to prove that shipping is alive and thriving. There is a vessel going past our building here in Hamburg now, sounding its horn. So if you can't hear me, that's because of that. I also have a confession insofar as I have some sort of mechanical fault or technical fault with my laptop. I can't share my screen. If Elnara the organizers can share it, then fine. Otherwise, those listening can obtain a copy through BSS, and I can do it without anyway. Although it's better, I think you will have enough presentations during the course of the afternoon not to miss mine. I've been asked to give our perspective of COVID-19 from a manager's point of view, and really want to touch on a few points in as short a time as possible. I appreciate the time constraints. The first is business continuity plans and the importance of those prior to the onset of COVID-19 and indeed going forward. The second is solidarity. The third is, there we are, the genius Elnara. The third is localization of services. Fourth is communication, the importance of communication. And fifth, mental health. We've seen a lot of talk about mental health. We managed to find a very, very good mental health provider. And Elnara, have I got control of this screen or have you? I'm just looking. Yes, well, I think if I can, if we can just call up all of the various points. There we are. The sixth point is optimization, the need for optimization, and we have this performance optimization control room, which we'll hopefully get to show you the video of. And then finally, the technological revolution that has happened in this business over certainly in the last few months. If ever we thought this was an evolution and not a revolution, well, certainly COVID-19 has dismissed any ideas of that. Talking then firstly about business continuity plans. We, right from the start, if we could just go back the screen, Elnara, right from the start put together a business continuity plan predicting that COVID-19 would hit us and actually hit us harder than it did. And that business continuity plan not only built in working from home and the need to work from home and the IT demands that were needed for that, but also equipment and also GDPR considerations, because of course, notwithstanding the challenges of working from home and the exposure, the greater exposure to data leaks, we of course are all bound by GDPR regulations on an ongoing basis. So we had business continuity plans in place. Those business continuity plans provided for redundancy, certain teams and individuals dropping out. We had dry runs, and even now, without wanting to be overly negative, we are planning for the second wave, if we want to call it the second wave, or certainly a spike in the first wave, where our offices are primarily in Cyprus and in Germany and Singapore. Certainly in Cyprus and Germany, life is getting back to a degree of normality whereby we are up again to 90% occupancy of our offices, with only those staff with certain susceptibilities working from home. But we are now planning, we're amending our business continuity plans for the second wave, and what we've learned from the first wave. Really, really important to do, I think. And you know, I think the big advantage of shipping companies is that we are, all of us, so adaptable anyway, because we have to go with the geopolitical various crises that seem to fall on our shores all of the time, and that has created a degree of resilience and adaptability, which probably means that shipping companies have been able to cope with this crisis better than other companies. But certainly starting the planning now for for any spike and or second wave coming along. The next point is solidarity amongst operators. And I think unlike 2008, we've seen incredible solidarity amongst operators and amongst managers, not only nationally, but also internationally. And I can recall 3 months ago making 4 or 5 important calls to other large managers where I spoke to the CEOs of those businesses and said, look, let's work together. Let's put any competition to one side where we cannot possibly hope to fly superintendents and other personnel out to ports in the normal course. Let's work together and lend personnel, lend technology, and lend resources where possible to keep to keep the industry moving and keep the propellers turning. And that's been incredible. I've got to say, certainly that initial group of 4 has expanded to about 8 now, and I'm sure we're not the only ones to do that. And nationally and internationally, big shipping organization and companies have come together and helped out, which has been terrific to see. I'm sure we will all revert back to healthy competition in due course, but for the moment, solidarity is prevailing, particularly, I have to say, where it impacts on crew and the importance of getting crew off vessels. And I think, Apostolos, you mentioned this right at the start. Really, really important that we all work together, whether it's by way of chartering planes or putting pressure on governmental and international organizations to get crew moving in a better way. The third point is localization of services. We certainly as a business were very used to using our own resources, to sending out our experts to particular vessels wherever they might be, and using our offices in the various locations around the world to provide services to our clients. That was not possible when COVID-19 hit us. And as part of our business continuity plan, we enhanced relationships with local providers, surveyors, local surveyors of the requisite quality to perform these services for us. And I think going forward, I think a lot of businesses have learned the localization lesson. And far from this, us going down the globalization road, I think it's quite the reverse now. We're looking at what can local service providers provide at a quality that we demand, and at a price that we demand as well. So localization of services has been really, really important. Fourth point there, communication. As with all things, communication is vital, and never more vital than in COVID-19. I think shipping companies, again, because of our international nature, we are perhaps rather better at communication than other companies. But I'm talking here about communication internally to staff, where most of those staff at one point, I think we were 99% working from home, and our IT services were providing that. That made communication all the more important, but also to crew and also to clients. So we as a company still are on a weekly basis producing videos, which we distribute on our e-platform, our e-learning platform, to all crew and to all staff, telling the staff where we are, telling the staff where we are with COVID-19, what updates, what plans, what measures we are taking, and with regard to the state of the business and what plans we're making in that regard too. And we replicate that to our clients too. So I think one of the benefits of COVID-19 has been an enhanced perception or appreciation of the need for effective and transparent communication. And when we had a vessel calling here in Hamburg 2 weeks ago, and when we went on board that vessel, the identification with the crew through our communication, through our enhanced communication, was so much better. And the first thing the crew talked about was the videos that they were getting, the better information, the free Wi-Fi, et cetera, and we felt we were identifying much more closely with our crew than ever before, as a result of which morale amongst the crew, contrary, I think, to perhaps what the press would have us all believe, morale on board the vessels is at an all-time high, providing the companies are looking after their crew and persuading the crew that they're doing everything they possibly can to get them off. because the crew appreciate, they're not stupid, the crew appreciate what's going on in the world, and actually they're probably in the safest place they possibly can be. The next point is mental health. And about a year and a half ago, we approached a company called Mental Health Support Solutions, whereby for $1 per vessel per day, we are able to provide 24/7, round the clock, a mental health helpline for our crew, that if our crew have any issues, they are able to pick up the phone, a free phone number or a WhatsApp number at any time, confidentiality assured, and get this help. And I've got to say, this is probably, of all the things we've done over the last few years, this is something that we're proudest about, because I can tell you that service has been so much used over the last 3 months by shore staff and by crew, and it's the first thing when you go on board that the crew tell you about, that you know, they get it now, that the bravest thing they can do is ask for help. You know, we see mental health being pushed so much in the media prior to COVID-19 ashore, now on board the vessels too. There is absolutely no stigma attached to picking up the phone and asking professional psychologists for help. Really, really good service. $1 per day per vessel, and can one possibly argue against the commercial viability of that proposition? No one can't. If you can save one life, then that is of course massively worthwhile. Next thing, need for optimization. Probably a year before COVID-19, we developed our performance optimization control room, spent over $1 million developing it, because we saw the industry going this way. We saw that digitalization was just a means to an end. The end was optimization. The need to squeeze every last drop of value out of the service that we were providing. And really, the savings that can be achieved through this, I think to the left you see the optimization center in Cyprus. You're going to see a video shortly. The savings, the daily savings, are astronomical. And to put a vessel into this control room, whether it's managed by us or not, costs approximately between $500 and $700 per month. The savings are in the thousands of dollars per day. So it's a complete, utter no-brainer. And of course, we're seeing the sophisticated clients demanding this from our clients' vessels going forward to reduce costs and optimize the service. So really, really, optimization along with technology has hit us massively through COVID-19. I think in the months to come, as we recover to an extent from the first wave, and pray to God we don't have a second wave, the need for optimization will be enhanced all the more. The final point there, before we just look at the video on the performance optimization control room, is technological evolution just became revolution. I was a big advocate of digitalization being evolution as opposed to revolution, because when you compare it to the advent of the email or the advent of the word processor or the internet, of course, the technology available now paled into insignificance. But with COVID-19, of course, to use an analogy, the technological asteroid hit planet Earth, and all of the dinosaurs, myself included, were wiped out or had to adapt. And we now, all of us, are very familiar with these types of platforms, with communication technology, with our vessels, with our staff, that before we were never dreamed possible, and we've been dragged kicking and screaming into that space. So I think the technological revolution is really firing on all cylinders, and we are going at a pace that was just not deemed possible a few months ago, and I think that pace will continue and tie in with the optimization. So please, if you'd like a copy of this video, which hopefully Elnara will play now, on the performance optimization, please ask BSS to provide you with a copy of the same. Please approach us. If you want to use this technology, it is available to you. It's completely, your information is completely kept confidential from anybody else's, and just the analysis that you can perform through this is quite exceptional. So Elnara, if you could play the video, I'd be very grateful. Thank you very much to all of you.
There's no sound.
I don't think there's a sound, Elnara.
Some familiar faces.
Let's.
Elnara, are you able to get the sound on the video? Otherwise, we may just have to send the link, as you mentioned before, Mark.
Absolutely. I'm terribly sorry. I don't know what's the problem with the system. No, I think it's. I think we'll have to abandon that one, and
yeah.
maybe the technological asteroid has passed
okay.
on this occasion. Thank you very much for listening. But you're more than welcome to contact the organisers, and you'll get the link. But I would encourage you to do so. Thank you.
All right. Thank you very much, Mark, on this insight from the manager's perspective, and some pretty impressive stuff that you're doing there at Columbia. Okay, because of time, let's move on very quickly to Panagiotis, and then we'll take the questions, as I said, at the end. So Panagiotis, over to you.
Thank you, Mr. Poulovassilis. Good evening to everyone. You see my screen? Yeah. So I will follow Mr. O'Neill's presentation as technical managers, and we will present to you the plan and action of controlling and mitigating COVID-19, what actions have been taken until now, because the actions are evaluated in a weekly base in order to be updated in accordance to the latest feedback received related to COVID-19. So we'll present to you a Shipmanagement update, the mitigation measures in plan, the precautionary measures implemented, health and safety initiatives, and finally, what we're doing with audits, inspections, while we cannot travel. All management companies and manning agents continue to make all their required operational adjustments in order to deliver to the owners which have trust their property to us and deliver the optimum in accordance to the latest or the prevailing situation. All of us, we deliver best practices measures on board in order to prevent the COVID-19 outbreak. The ship captains, this is a statement that I was discussing yesterday with our HR department and Marine department actually, and I asked them what you mean what we mean with this statement. Yes, we are trying through our captains, yes, to convince the local authorities in order to speed up the process, the discharging process. We are able to increase discharging rate. Of course, it might have a commercial effect, but we need to have the owner's understanding and consent in order to protect our crew, the environment, and finally the property. Our industry, the last decades, have utilized approaches in order to mitigate the risk involved in our activities. So we have taken the approach proactive, active, and reactive approach, and in our days, taking into consideration the severity of this risk, COVID-19, we need to be super proactive. What means super proactive? We need to deliver to our crew members the understanding that we as a company are doing the utmost in order to deliver to them, to protect them. However, they must understand they must protect themselves by all ammunition, let's say, that we are delivering to them. So it's not a matter of the company also only, but what the crew members, captains, AB, all our crew are doing for themselves. Suspension of crew changes on all vessels and restriction of visitors. The suspension of crew changes, it's not so easy to implement it, since, yes, we can offer them a salary bonus. However, in our case, and in this case, money doesn't count. They want to go home. They are worried about their families. They're worried about the situation when they will go home, since in some occasion we are unable to answer them when we will be able to have them back to the beloved ones. What Mr. O'Neill's have highlighted, yes, continuous updates with the constant circulation of letter, medical support for all crew members, obviously, not for the vessels, 24/7, mental support from a registered specialist in case that is needed. I purely and I fully agree with Mr. O'Neill. The mental health of our crew member must be seriously taken into consideration, and all support needs to be provided. We maintain strict boarding protocol for visitors and monitoring the temperatures. Here we have restrictions with GDPR. It's a private data, so we are not allowed to have or record their private records. Daily monitor of crew member temperature. COVID-19 risk assessment is performed prior to the vessel's entry in port. We have a total risk management orientation, and risk management, we can say it's in our blood. We never do something unless we evaluate all risks involved and all mitigation measures are placed prior performing the job. Otherwise, it's declined. Management communication regularly with vessel to keep crew's morale high. Yes, with the senior management of the company in weekly base. We are talking to our masters, and we're performing Zoom conference with all the crew members available and not having a rest, in order to pass them the message that we are next to them. Yes, we understand them. However, we need their understanding. We don't want to keep them more than 4 months on board, which it's the contract. What they need to understand that whatever measures we are taking is to protect themselves. Ensure some motivation through various means. And furthermore, in addition to the measures implemented on board the vessel, we have taken the head office mitigation measures, which some of them limiting the number of visitors, receiving health declaration for all visitors prior granting entry allowance. Travel of all office staff have been put on hold unless deemed necessary by the company's top management. All superintendents on travel have been called back to their home country. All our employees returning from overseas are required to comply in mandatory with local ministerial health guidelines, such as self-quarantine, etc. Office personnel working from home, yes, we are able, and the industry is quite mature for the distance working. We are operating vessels which are a couple of thousand of miles away from us, so we are used to do our business by having each other in distance. Health and safety initiatives, similar that what Columbia is doing, the mental health, we are providing our crew members 24/7 medical support, and we are giving lately particular attention in the mental health by providing them a hotline if they wish to call the dedicated doctor, they can do it. And yes, I have to admit that since we took this initiative, we have been advised that several calls have been received, although they cannot disclose the name and what they discussed. The online mental health, what I have said, it's working, and yes, we need to give more attention as an industry to this very important element of the need of our crew members. And what about the internal inspection, virtual audits using technology and setting different targets to reach the same objective? What we mean setting different targets. In accordance to the latest management review, which took place on January, we have set target objectives, and we have chosen the path in order to reach our objective. However, taking into consideration the latest circumstances, we must change the path, but we must stick to the objective. 0 incident, 0 pollution, and 0 COVID-19 incidents. Thank you very much for your attention. I have speed up our presentation, and we're open for any kind of question. Thank you.
Okay, thank you, Panagiotis, for presenting the capital ship management response. And very, I would say, constructive comments about the initiatives that your company has been undertaking, similarly to what Colombia also have been putting together. But I think this gives a very, very good, let's say, insight, practically, what the industry is doing as a response, direct response to this pandemic. Now, this is the end of the formal presentations. We have slightly overrun, but I think it's been a very interesting set of topics. So that's why I think it was best to keep it flowing. What I intend to do now is we have some written questions. Some have been sent at the beginning of or before the webinar started, and some have been coming in over the course of that. So what I will do is I will try to direct the questions to the appropriate panelists, including myself, where appropriate, and aim to cover as much of those as possible in the time that we have. First question that came in it was addressed to myself. Please ask Mr. Apostolos to answer this. Will the pandemic cause a significant downfall in the shipping more than the 2008 crisis has done? Well, I think I alluded to that in my introduction. Also, Katerina covered it in quite some detail. But obviously, I think the easy answer or the simple answer is no one knows. No one knows because we don't even know where the pandemic is going to end, how long it's going to take, how deep its impacts are going to be. As I said at the beginning, various countries are still in rising numbers of cases, and their, let's say, stages of lockdown are just starting now. So we need to be, let's say, very closely monitoring, as the two gentlemen from ship management companies very, very correctly pointed out. The shipping industry has been very, very good historically in their, let's say, resilience to any sort of crisis. And I think the methodology of the crisis management is something which has almost become part of our DNA in shipping. And therefore, that's how the shipping industry has also responded now. We need to be very close. We need to monitor. We need to look at the financial indicators. Katerina gave us a lot of, let's say, useful ammunition in how we can, let's say, keep in touch with the pulse of the markets, some of the fundamentals and how they're going to be shaping out. So that's all we can do. We can look at scenarios. We can plan and see, maybe it's going to be a mild scenario or a less severe one, or it's going to be a more troubled scenario, in which case we need to be more patient and maybe introduce, let's say, longer periods of crisis management. But it all depends on really what happens with the pandemic. The industry itself is not in bad shape. The fundamentals before the crisis were sound. The level of new buildings, the order book was reduced to, let's say, the previous decade. But as I said, we need to see what happens over the next few months in order to understand exactly how the impact and how deep, or how, let's say, what the shape of the recovery is going to be. It's going to be U, V, L, or what? So I think that pretty much covers that first question. The next question was, I think it was addressed to the two ship management companies, and it was related to the background of reduction of revenues during this pandemic. As I said at the beginning, depending on which sector everyone is present, there were pluses and minuses in terms of the revenue shortfalls. But we had obviously 2020. The big question there was how does the 2020 fuel cap was going to affect the industry, and then COVID, of course, came in. So what's happened actually to your ship management company's plans for scrubber installations? Have you had to cancel or let's say delay the installation of scrubbers, for example, in some of your ships? Maybe Mark first, and then Panagiotis very, very briefly.
No, it's a good question, and I think we never advised our clients one way or another on the viability of scrubbers. I personally was always of the view that the low sulfur fuel price would come crashing down in any event, because it was just unconscionable from an environmental point of view. And bear in mind that before COVID-19, we had the start of a huge environmental movement, that low sulfur would actually remain at a higher price than the normal fuel that we'd seen before that date. So that, of course, has happened. At one point, I think, during this crisis, we were being paid to take oil, or the bunker price was almost negative, or certainly the oil price was certainly negative, and has remained low since. I think one of the casualties of this COVID-19 crisis, as countries try to get their economies back in gear, is that the environmental question will inevitably take a back seat. And no matter, it would take a very brave, and dare I say it, a very rich country to use this opportunity to reshape its environmental and industry policies going forward. So I'm afraid that quite the reverse. We could see a reversal of some of the environmental policies that we've seen in the past. Would IMO 2020 have happened had we had the COVID-19 crisis a year or so before? I'm not so sure. I really am not so sure that environmental issues would have been put to the fore in the way they have. So certainly we've seen very few clients pressing for scrubbers on board their vessels. If it made economical sense beforehand, that was only because you had a sustained period of time within which to earn back your capex. I'm not sure that there's anyone can make out a decent argument for that now, where we've seen the bunker prices fall so massively. But that's a view. That's more of a personal view, but it's also a view shared by many of our clients.
Okay, thanks for that, Mark. Panagiotis, do you have anything to add to that?
Yes, we in Capital Sea Management, we were part of the discussion as far as the scheduled scrubber retrofits, whether we are able to execute what we were committed prior COVID-19. And since COVID-19 appeared, let's say, we have performed 4 scrubber installations by following, as I have said, the proactive approach. We have our own people in China. We are discussing, until now we have 0 incidents in shipyard and on board our vessels, by following strictly the 3 rules that everyone knows. And our position is, yes, we are positive, since we have performed 4 until now, and 2 are coming. However, you need to strictly comply with what you have said as a company, and with the yards and the local authorities, to have a common approach rather than having a fight whether what to do, or whether we restrict people and we have the absolute minimum manpower from the yard on board. So yes, we continue. We consider that we shouldn't stop due to COVID-19 the growth, and we represent an industry that we shouldn't stop just like that.
Okay, thank you Panagiotis. Next question is for Katerina, and this is it's out of the Greek scope, but in some industries, blockchain was well integrated and successful to some extent. Why do you think blockchain was not successful in the maritime industry and economy? If you have an opinion on this, Katerina.
I'm of the I think blockchain has already been implemented in containers and in the logistics of the containers. And I think that fits very well there. And it is really optimizing the logistics side of containers. Now, I don't know what else the delegate is asking exactly, is why hasn't it been successful?
Maybe more, why is it not maybe more widespread in other sectors?
Maybe because, for example, blockchain is very popular for Bitcoin in the finance side, okay? And I don't think that would be relevant for the actual cash or currency or even remittances. Reason being transparency. Blockchain technology encrypts everything, and it's a public ledger, so to speak. So you have a trace of record. And due to confidentialities, I think it won't be very popular in the actual banking, finance, remittance side, okay? It is in Bitcoin, but then again, Bitcoin is not a physical monetary cash item, okay? It is totally computerized. So that needs to be controlled, so to speak. But I think blockchain has been very well implemented in the container side, and it's working beautifully. Now, if it can be adjusted to assist grains or tankers in some of their activities, I think the tech experts need to address this. I don't have an answer for you.
I think that's a fair answer, Katerina. The next one is also for you. Do you think, because shipping is one of the pillars of the Greek economy, that there should be a stimulus package for shipping as an industry as well?
No.
Why?
Shipping, okay. Shipping is an independent industry, okay? And the more you regulate an industry, the less profitable or the less efficient it becomes. And because shipping is an industry that is based on world economy, what exactly stimulus are we discussing? If we're discussing stimulus to increase the supply side, we would be shooting our foot down. If we are discussing stimulus to increase the demand side, then yes, that's world economy stimulus, all right? That fuels the economy. It's not Greek shipping, it's shipping in general, okay? Now, if we look at what has happened during COVID and how the EU and Greece has been, and Cyprus, in fact, has been looking at facilitating liquidity-wise and financially in the banking system and the loan and the leverages of the shipping companies, that has worked nicely, and that is some sort of governmental involvement, okay, in a free industry. And what do I mean? The Greek Ship Owners Association made a question to the EU Commission, which the EU Commission has said that they will allow restructurings until, or waivers of installments until the end of this year for companies that have been hit in their cash flow in these months due to COVID. So what that actually says is that the European Commission and the Basel rules for the banks will not look at these loan installment waivers as non-performing loans. Because every time we go to a bank to restructure our loan, the bank has to categorize this restructured loan as a non-performing loan. Although you may have cut your installment in half. You haven't stopped paying, but you're paying less, all right? Or you have a waiver of 1 or 2 installments and then you'll be picking up. This immediately gets categorized as non-performing loans, and it costs on the part of the equity and the reserves that the bank has to put aside. So what the European Commission did actually is say that for the Greek banks, at least, we will not be considering as non-performing loans the loans that asked for restructuring or installment waivers until the end of 2020 due to COVID. So that was a nice breather that began with the through the Union of Greek Ship Owners, who pushed this to get the answer for the bankers, because the bankers were willing to assist, but then it just also hit them on already a bleeding banking financial structure, because the industries, due to COVID, it's not just shipping, it's all the industries who are not operating as a worldwide economic crisis that we're having. So the banks are really under great pressure right now, and not only under shipping. In fact, I think shipping is one of the industries they believe will kick in very quickly to provide repayments and liquidity to the banks, because the hires that reach the earnings account of the companies provide money and liquidity to the banks.
Okay, thank you, Katerina.
I don't believe in regulated industries.
That's a good answer. The other question, I can try this one very briefly. It's whether we see the rising Asian market as the shipping sector as a threat to Greece. My personal take on this is that quite on the contrary, I don't see it as a threat. I see this as an opportunity. We've already had very, very good examples of sound collaboration between Greek and Chinese partners, whether they are owners, charterers, management companies, financiers, what have you. I think it's only been good for shipping as a whole. I believe, because I've dealt a lot with China, that there is a great deal of respect between Greece and China. The Chinese respect what Greece has done in terms of ship management, ship operation. And they trust their vessels according to Greek companies, and I think this can only continue. So, very, very quickly. Although, obviously, here we would probably need another webinar just for this kind of discussion. But in the interest of time, I would say categorically, I don't see this as a threat, but definitely as an opportunity for Greek shipping, which actually they have already grasped over the last few years. So some of the Q&A that have been coming in, this is one on technology. So maybe Mark, you can take this one. The forecast, especially on the environmental technologies, would environmental technology be attractive to investors? This is let's say, taking some of your points from your presentation as well, but also Katerina, but if we can just have some insight into that, Mark.
Yeah, I think institutional investors have to tick the environmental boxes in the same way that other large companies have to. And certainly the technology that we have now deployed through our performance optimization control room not only provides the clients with huge economies of consumption economies that are achievable, monitoring consumption and optimizing consumption and minimizing consumption, but also any other CO2 emissions, etc. We're also able to monitor those and give accurate recordings of those. So the whole environmental package is ticked in a very proactive way, and of course that is advantageous to investors. Investors want to see that, banks want to see that, equity funds want to see that, because if the environmental box is not ticked for all the right reasons, then that is going to cause them problems. So yes, I think technology gives us a way of doing this. It gives us a way of, in the same way that it gave us predictive maintenance, it now gives us the ability to control the emissions, CO2 emissions, sulfur levels, etc., and economize and really achieve economies that were never thought of as possible before. So absolutely, technology is the only answer to that.
Okay, okay, thank you. Next one, maybe Panagiotis, you can take this one. Do you consider any changes will happen to the role of Greek shipping industry in the Mediterranean region? I assume as a result of COVID.
I can understand why in the Mediterranean. No, we don't expect, from our perspective, to have any change as technical management, which covers our activity, let's say. Now, financial whatsoever, it's not me to answer. However, no, we don't expect. By having the proper communication with our units, the vessels, the answer is negative.
Okay. And then we've got three which are finance related. Katerina, I think you're having the majority of the questions today. Maybe you can
Money talks.
Money, cash is king, as you say,
Yeah.
the queen. But
Managed by queens.
What are the general thoughts for preferring Chinese funds over European funds in Greece, especially in the shipping sector? Does Chinese effect have a real power on Greek shipping industry, or even not? If not, does the industry need and require it?
Okay, Chinese funds. I don't know any Chinese funds that come directly into Greek shipping or into shipping, but they do come as lessors, but it's not funds. It's Chinese leasing, okay? And Chinese leasing is a new financial product that is out in the market. It is not very attractive to Greek shipping, as far as I know, but not because it's Chinese, but because it's a leasing structure in general, okay? Greek ship owners are not very attracted by leasing structures because they lose the ownership of their vessels. So they prefer to have financial structures that they are owners and the financier is mortgagee. So Chinese funds, I haven't heard of any. Do we need funds? We need liquidity for shipping. So wherever that liquidity can come and terms that are attractive to the shipping industry, then yes, it's all based on what terms there are out there and on what terms is the money given, is basically what I can say.
Okay. The next question is, do you think European funds would be enough to boost the maritime economy?
Again, the same answer. Funds means liquidity. Liquidity is needed for maritime economy. So wherever liquidity comes from, it is needed to boost the maritime economy, but it's all a matter of what terms is this money being given on, okay, for the other person to take it in order to boost whatever you mean by boosting the economy.
Yeah. And,
I don't know what else the person asking the question had in their mind.
If there's a follow-up question, that can come in writing, I guess.
Of course,
the webinar.
we'll address it.
And the last one, I think you've probably answered this one already in your previous, one of your previous responses, but about the Greek ship finance market and when will it recover to pre-pandemic levels? Of course, even pre-pandemic
when borrowers
levels,
start repaying their loans. Because banks
when and
increase,
if, yeah.
when and if, yeah. And it's not just the Greek ship owners, okay? I need to tell you that the Cypriot government had by policy that due to COVID, the Cypriot banks deferred, not only in shipping, but in all loans given out within Cypriot companies or companies operating within Cyprus. They have deferred interest and installment payments until the end of the year. Deferred, waived. So as of, let's say, March, you just stop paying your bank. Well, that doesn't do very much to the bank's balance sheet or P&L for it to be back in business, all right? Yes, it helps the existing borrowers, but then it restricts the bank in giving out money to help and assist and push industries and the economy to keep growing, okay? So money needs to be out there in all the industries. So it's a chicken and egg situation. I think this COVID crisis is more serious than the Lehman crisis and totally different than the 80s crisis. It has brought us into a new era, is my personal opinion. And yes, technology. Mark, I like your comment that the meteorite of technology hit us dinosaurs. my heart just went out to you. Totally agree. But I think it took us to another level, and it's a better level. But again, we need to find balance in that level, okay? Because we're going from one side to the other. We'll find the middle ground again. We'll find balance.
Good. Okay, so that brings us to the end of the questions. I can't see any left. So, well done to all of you for being very good responders to the live questions. We've slightly overrun, so I think even with time management, we've done pretty well. We didn't have the polls, unfortunately, but as I said at the beginning, maybe these can be done as a post-webinar action. Key takeaways for myself, and I think like most people, we all try to get something out of these discussions and webinars. For me, there are some positive indications that have come out of the commercial and financial analysis from Katerina. And from Mark and Panagiotis' presentations and insights, something that has stuck with me is technology, the application of technology, and almost as a catalyst or an acceleration of making use of that technology, which we had, but we weren't really putting it in the forefront of our agendas. Now we're forced to do it, and it's been done successfully. This is one of the success stories. And the other is the well-being of the seafarers, the mental health. I'm glad to see that this is something which is being put on the agendas now as a standard issue. I think the advent of telemedicine is something, again, that's going to come out of this crisis. And if shipping can do this, I think the whole world can do it, because the seafarers are probably those which are facing the biggest challenges day to day, not knowing which country they're going to go to next, under what conditions, who's going to be joining the vessel. As Panagiotis said, there are massive risks involved, but I think the learning points are that there are very, very good response plans, that if we have the sufficient levels of experts, no one is an expert in everything, so we need to rely on experts for each subject matter. And if this is done effectively, then the optimization, let's say, to use one of Mark's words, is the journey that we are all aspiring to go on, and improve our service delivery as all these challenges and risks and crises hit us, which is inevitable with life and in business. So from me, thank you very much to everyone who attended, who was watching and listening. Thank you for your comments, your questions. Thank you to my fellow panelists for your fantastic presentations and insights. And as I said, I think we each learned something from each other. And I'll be very, very pleased to answer any further questions offline if anyone has anything to add to this discussion. Thank you again to BS Group for putting it all together. And
thank you.
Have a good rest of the day, and stay safe and well.
Thank you very much.
Thank you as well.
Bye-bye.
Bye.